Hey, everybody. It is Chuck Barone here on Wednesday, June the 12th, 2024. Good to be back. Nice to see everybody, all my friends on the chat getting things rocking and rolling. Back from my conference in Reno, which I got to say I'm glad it's over. And it's good to be back with everybody. Look at all the fun stuff I've missed. Everybody getting on. Nice to see you, Sarge. Um, Yeah, so we saw, I've missed a lot over the last couple of days. I've missed Monday and Tuesday, and I was trying to get a show out on frickin' Monday, but the conference, the speakers just, I couldn't find even a second to get out of there and do it. So it didn't work out. I knew yesterday was going to be really hard because it was a travel day, and when you're traveling, it's hard to even get it together. But I'm back today. We got a lot of stuff to talk about. Before I get started, though, let me take a half a minute. As always, welcome everybody to the show. And thank you for your support. You guys' support means the world to us here. It's what keeps this show going, guys. We appreciate you. All right, so let's talk about markets today. We had the big doubleheader today. They call it what was he saying? It was a solar eclipse event, basically, where you have CPI numbers coming out the same exact pretty much moment, but day for sure, as the Federal Open Market Committee meeting finishes up. So we got to talk about CPI. We got to talk about Powell, of course, was on today, making markets go crazy. You saw these numbers today. What a weird, weird day. Okay, so the Dow Jones, which everybody would pretty much agree, I think, is the bellwether for the stock market. The Dow Jones down 35 points today, 38,712 on the Dow Industrial Average. The NASDAQ up 264, 17,608 on the NASDAQ, a brand new, another world record. The S&P plus 45, up 45 points today, 5,421 on the S&P, another new record for the S&P. So there you have a weird looking dichotomy, right? You got the Dow down, and you got the S&P and the NASDAQ at brand new records. Okay, there's the stock market. Market really buoyed up by this CPI report today, and we'll talk about that in depth here just a second. Bond market's also rallying like crazy. The 10-year falls 11 basis points today, now down to 4.29%. They were worried this was going to go up over 5, remember, guys? Now 4.29% on the 10-year. The 2-year down 8 basis points, 4.75% on the 2-year Treasury. So bond yields coming down, the market rallies up like crazy. Why? Because of this CPI report? We'll go over this. You guys tell me if you think the markets should have rallied like they did because of it. The dollar, well, loose interest rates make the dollar go down, falls 55 basis points today on the index, 104.73 on the dollar index. When you lower rates, your currency goes lower with them. That's the reason. Now they're expecting a lot more rate cuts. Again, we'll talk about that in a little bit here. Precious metals, gold and silver today with the dollar falling, rally up a little bit. Gold up $8.10, $2,342.30 for an ounce of gold. Silver up 49 cents per ounce, now $29.72. We need to get silver back up over 30 and hold it, guys. That's important. Hopefully, we'll be seeing that very soon. Gold's still at a good number, if you ask me. Oil today rallying up 45 cents, $78.35 for a barrel of West Texas Intermediate. I'm telling you guys, have faith. This price is too high. It's going to come down back to 75 or less. You'll see it. I was reading an article today that was saying that peak oil is pretty much here as far as the demand for it. I don't know if that's true or not, but the article was saying that by the time 2030 rolls around, because of the what we're doing as far as making advances in alternative energy, oil, there'll be a mammoth glut on the oil market, and oil prices will come down. We'll see. I'm not waiting for 2030 for oil prices to come down. I want to see that happen in 2024 when everybody needs a little relief at the gas pump, right? Bitcoin today up $908, rallies with the market 68,151. Bitcoin needing to make and break that $70,000 mark. Going to happen. Going to happen. Believe it, guys. All right, so let's talk about the news today, right? So we got the CPI. Here comes the numbers, guys. Top line CPI comes in at 3.3%. Last month, 3.4. Analysts expected 3.4. They expected it to be unchanged, so they missed. They were a little too high. 3.3, and the market went crazy over it, right? Core 3.4%, down from 3.6 last month. Okay. Let's, what these numbers are in my mind, 3.3 from 3.4, 3.4 from 3.6. Anyway, the market went freaking crazy. Let's light the fireworks and pop the corks, guys. It's time to party. We're going to break records, and they did. Now, the odds along this Federal Reserve report today, odds for a rate cut in September on these markets, the Fed funds futures, right, jumped up, and analysts are now talking up to 3 rate cuts this year. Not going to happen. Don't believe that. That's crazy. Analysts are always super optimistic. It's not. That's not. Bond market rallies like crazy. Yields tanking. We went over that already. Guys, this is a giant nothing burger in my mind. They're still 60% above their target. Is that a reason to celebrate? They're more than that, 70% on the core number. I'm Powell talking, and this number, I guess the big sigh of relief and the big celebration was inflation wasn't going up for a change, right? Guys, nothing burger, nothing. Still 60%. Now, don't get me wrong. We'll take 3.3 over 9. We'll take 3.3 over 5 or even 4, but nowhere near target. And if the Fed's going to stick to, I think the Fed wants to cut. Their balance sheets are getting eaten alive. So is the Treasury, and so is everybody else. We'll see if they got the stones to ride this thing through. I got to say, I'm starting to have my doubts, but so far, holding fast, guys. Now, you really think that moving from 3.4 to 3.2 or 3.4 to 3.3 was enough to make the S&P break the all-time record? I don't know. There's so much stuff underneath these numbers. You still got the beef with the banks. You still got commercial real estate. You still got residential real estate in the shitter. You got so many cracks in the facade. An event like this is cause for celebration. Well, that's pretty sad news, right? I still sticking to my guns, guys. 1 rate cut this year. I know the numbers are fake, but they're the only numbers we get. I tell you right now, guys, 1 cut this year in December. If we get that even, depending on where we go with the data. I'm telling you right now, guys, they're not going to cut rates during the election. They're just not. So when you're going to hear people tell you, oh, yeah, they did it before, in 2008, had no choice, not really in something that's normal. So just stick to that, guys. Know that's true. Want to hear an interesting thing, guys? I'm a realtor. I'm mortgage and real estate, and the market's just in shambles, not only here in Vegas, but across the country. Listen to this. I was doing a little research. 1970, okay? So this is 50 years and change ago. The average price in America for a house was $23,430. $23,430. Now, here's the thing, though. People didn't make as much money. In 1970, the average income in the U.S., get this, guys, don't freak out in the chat here, $9,400 per year, right? So people were making $800 a month, So you had to have prices lower so people could even afford to live in a house. But here's the interesting thing that caught my eye was 23,000 change for a house, 9,000 and change the income. So basically 2.5 times what people were making is what houses were selling for, right? So basically if you're making 10,000, houses are 25. Okay? Now let's look at today. You got about a $400,000 average on houses, much higher in a lot of places, even here in Las Vegas, 469. The average income, 48,000. So now you have, instead of the 2.5 times your salary it was in 1970, it's 8 or more than 8. Because I think I'm lowballing these prices and highballing the actual income because most people, I really don't believe the average income in the US is 50K. So 8 times. Now that's inflation when we had no inflation, right? So that's why the numbers are fake right there. Okay. So Powell, let's talk about Powell for a second. Powell comes out after the meeting, does his little spiel as he's talking at the podium during the presser. Okay, so Fed, I got the article up right here. Fed holds rates at a 23-year high while scaling back its estimate of rate cuts this year to 1 from 3 previously. The central bank voted to keep its benchmark rate at 5.35. Close call on the revised blah, blah, blah. Listen to this. They, at the same time, Fed cut rate cuts, how many we would get this year, to 1. They raised the number for next year. Okay, so now they see Federal Reserve sees 4 cuts happening in 2025. Doesn't that sound a little similar to what we were hearing for this year? Okay, so in a policy statement, Fed officials do blah, blah, blah. They did make one notable change in their language, okay, reflecting this new optimism. Ooh, here's the language they had been using. There has been a lack of further progress toward the committee's 2% inflation objective. Okay, that's what they were saying. Now the new statement. There has been modest further progress toward the committee's 2% stated inflation objective. So this is the kind of thing that these markets are rallying on. It's silly. They reiterated their statement they need to see confirmation in the outlook for inflation returning to their 2% target before cutting rates. I didn't see that today. Here's a quote. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. Powell at the press conference declined to give any further guidance on when a first rate cut could happen, saying, quote, I don't have a precise date for you. We can't know what the future holds. He did confirm some central bank optimism, blah, blah, blah. We welcome today's reading and hope for more like it. Well, we're going to go down a tenth of a point at a time. You know, it's going to take another year to get to 2% on the top line. Okay, stay fed. Thatcher also made it clear he's well aware of the two-sided risk of waiting too long to cut rates or cutting too early, thus undoing all the work done to get inflation down. We have the ability now, quote, to approach this question carefully, and that's what we are doing, adding that it is not the Fed's plan to wait for things to break and then try to fix them. Guys, this is Fed speak for we really have no friggin' idea what's going to happen. We're operating in the dark, we're operating with hope like everybody else. That's the shot, man. They don't know. And they are not even masking the fact that they don't know. But, you know, the market does. So the market goes crazy. The odds for the first cut in September today, the market jumps to 58% chance for the first cut coming in September. Okay, markets being optimistic. Yay, markets. But I'm telling you guys, no, we're not going to get a rate cut in September. And here's what I say, even if we did. Okay, so let's say they cut rates in September and then they do it again in December. So they bring it down from 5.35 overnight to 4.85. Is that really going to move the world? It's not going to move my world. It's not going to move mortgage rates that much. Fascinating, fascinating times, guys. Anyway, I'm glad to be back. I missed you guys over those couple of days in Reno at that boring ass conference, but I lived through it, and here I am back. We'll be back again tomorrow to bring you guys the news you need. We'll get PPI tomorrow, and I'm sure we'll have a whole bunch of extra stuff from this Fed meeting. They'll release some of their extra stuff, and I'm sure there'll be a lot more analysis we'll go over. Hold your powder dry, guys. The way we've been taught, we've been playing it is should be working for everybody. Even though you're maybe conservative, more conservative than like a really aggressive investor would be, you're still in a nice, safe position. You have less risk with your investments, but you've still been making super steady gains. Stick to the plan, guys. It's working. It's working. Try to get out of debt if you can. By all means, do not take on any extra debt if you can avoid it. Basic core stuff we've been talking about since day one on the show. Anyway, guys, I'm getting over my time here. That's it for the day. Thank you, everybody, Salty and everybody else on the chats today, keeping it going. I appreciate everybody being here. Tomorrow's another day, guys. Let's see what it brings us. Until then, take care. Thanks.